Welcome, Aware, Nuda, Dumalang, Molo, Sobobona, Spandad, and a warm welcome to the Induho Knowledge Cast podcast, where your curiosity meets insightful conversations. My people.
Yeah.
Today we're going to have a lekker discussion.
Oh, yeah.
That will make you say ish.
For sure.
More times than your auntie at a braai.
Absolutely.
We're diving deep into how businesses here in South Africa can ride the rand roller coaster, those crazy ups and downs of foreign exchange rates.
It's definitely something every South African business owner needs to understand, especially if they deal with imports, exports, or anything involving foreign currencies.
And luckily, we've got a secret weapon to help us. The International Accounting Standards?
Yes.
Or IAS 21, which specifically tackles foreign currency transactions.
That's right. Think of IAS 21 as your trusty guidebook, helping you navigate the sometimes treacherous terrain of Forex.
We've got excerpts from IAS 21 itself, along with some real-life illustrative examples to make it all crystal clear. So strap yourselves in. It's going to be a wild ride. Now, before we get into the nitty-gritty, let's start with the basics. You've probably heard of functional currency.
Yeah.
But what does it actually mean for a South African business?
Imagine you run a thriving spaza shop in Soweto. You buy stock, pay your staff, and most importantly,
That's right.
rake in those rands, all right here in Mzansi.
Yeah.
The rand is the lifeblood of your business.
It is.
And that's what makes it your functional currency, the currency that reflects the economic reality of your operations.
Makes sense. But why is this functional currency thing so important? Is it just another box to tick for SARS?
It's way more than that. Choosing the wrong functional currency can lead to some serious headaches.
Oh, I bet.
Especially when it comes to your taxes. Imagine recording your profits in US dollars when you operate mainly in rands. SARS might raise an eyebrow or two.
Ish. SARS in their eyebrows.
And things can get complicated.
It's like trying to explain to your uncle why you don't have a girlfriend yet. Complicated business. But okay, so we got a functional currency sorted.
Yeah.
What about when we actually need to exchange currencies? Like, let's say you're importing those trendy takis from China that everyone's wearing these days.
That's where the concept of spot exchange rates comes in. You know how the value of the rand changes daily, sometimes even hourly? Well, the spot rate is the exchange rate you get for immediate delivery of a currency. Think of it as the going rate right this second.
So it's like checking the price of tomatoes at the market. It can change depending on the day and who's selling.
Exactly. And IAS 21 is very specific about this. When you record those foreign currency transactions in your books, like that taki order from China, you have to use the spot rate at the time of the transaction.
It's all about keeping things accurate and reflecting those real-time currency moves.
Right. Spot on. It ensures your financial reports give a true picture of your business's performance. Imagine recording those takis at R15 to the dollar, and then the rand takes a dip to R18. Suddenly, your financials are telling a different story.
Ish. And not a good story. It sounds like the spot rate thing is crucial for anyone importing or exporting.
Absolutely. Especially when you consider how much our rand loves to dance. And that brings us to our next point. How do we navigate those crazy fluctuations in exchange rates? Remember those takis we were talking about? Let's say you ordered them when the rand was strong, around R15 to the dollar. But by the time you have to pay the supplier, the rand's taken a tumble, and it's now R18 to the dollar.
Egg shame. That's a proper kick in the gut. You're suddenly paying way more than you budgeted for.
Exactly. And that's where IAS 21 comes in with some crucial guidance. It tells us to translate those foreign currency amounts, like the money you owe for the takis, using what's called the closing rate. This is the exchange rate at the end of your reporting period.
So it's like taking stock of the rand's moves at the end of the month and adjusting those taki costs accordingly.
Precisely. That way, your financial statements reflect the true impact of the rand's dance moves. And remember, these fluctuations can work in your favor too. If the rand strengthens against the dollar before you have to pay, you could end up paying less than you initially planned, a nice little bonus.
Okay, so IAS 21 is like a Forex coach, helping us understand and manage those gains and losses. But what happens when things get really hairy? Like when the rand's having a total meltdown and it's almost impossible to exchange for other currencies? I've seen those headlines and they make me sweat.
The infamous exchangeability issue. It's a scary thought, but IAS 21 has some wisdom for us, even in those extreme situations.
Please tell me there's a plan B when the rand decides to play hide and seek.
There is. Let me give you an example. IAS 21 has these illustrative examples that are like mini case studies. There's one with Entity X that operates in a country where the currency has become super unstable.
That's familiar.
Right. Entity X needs to pay its foreign suppliers but can't get their hands on any foreign currency because the exchange is restricted. Think of it like trying to find petrol during load shedding. It's scarce.
Oh, ish, that's a nightmare scenario. So what does IAS 21 say Entity X should do?
Well, even when the rand is playing hard to get, you still need to determine a reliable exchange rate to use in your accounting. IAS 21 suggests looking at things like black market rates or even using expert opinions to estimate a fair rate.
So it's like asking your trusted Forex guy at the taxi rank for advice.
Haha. In a way, yes. It's about finding reliable sources to help you navigate those tricky situations. The key is to be transparent about how you arrived at that estimated rate and disclose it clearly in your financial statements.
Honesty is the best policy, as my go-go always says. But even with all this guidance from IAS 21, some people might still think this is all just for accountants, right? Surely a small business owner doesn't need to worry about these complicated standards.
That's a common misconception. The truth is, IAS 21 affects anyone who deals with foreign currencies, no matter how big or small your business. Whether you're a spaza shop owner importing goods, a tech startup receiving payments in dollars, or even an individual investing overseas, understanding IAS 21 can save you a lot of stress and potentially even some money.
It's like knowing the rules of the road before driving a car. Sure, you could try winging it, but chances are you'll end up in a ditch or worse with a hefty fine from the traffic cops.
Exactly. And just like traffic rules, ignoring IAS 21 can have serious consequences.
Okay, I'm convinced. IAS 21 is not just for the big shots. It's a valuable tool for every South African business trying to navigate this crazy Forex world. So we've journeyed through functional currencies, spot rates, and even navigated the treacherous waters of non-exchangeable currencies.
Yes, we have.
Feels like we've climbed Table Mountain and back.
Definitely.
But before we reach the summit of this IAS 21 adventure, I have one more burning question.
Okay, shoot.
How can South African business owners like myself actually use this knowledge to make smarter decisions?
That's the key question, isn't it?
It's not just about ticking boxes, right?
Absolutely not. IAS 21 is all about empowering you to take control of your financial destiny, especially in this unpredictable Forex landscape.
I like that.
It's like learning to surf.
Right.
Once you understand the waves, you can ride them instead of getting wiped out.
I'd rather ride the waves than get a mouthful of seawater any day.
For sure.
So how do we become expert Forex surfers?
Firstly, IAS 21 forces you to be aware of the risks and opportunities that come with foreign currencies.
Okay.
You start noticing those exchange rate swings and see their impact on your profits, which makes you a savvier business owner.
It's like finally understanding load shedding schedules. You can plan your life around it instead of being caught in the dark.
Exactly. And once you're aware of the risks, you can start managing them strategically.
Okay.
Imagine you're negotiating a deal with a supplier in Europe.
Yeah.
Knowing IAS 21 helps you factor in potential exchange rate fluctuations when setting prices.
Okay.
You can even explore tools like forward contracts, which lock in a specific exchange rate in advance.
So it's like buying insurance for your rand.
Precisely.
You're protecting yourself from those nasty surprises.
It's about being proactive and taking control. And here's another crucial point.
Okay.
IAS 21 encourages transparency.
Right.
When your financial reporting is clear and consistent, it builds trust with everyone, investors, banks, and even SARS.
It's like making a potchi the secret is in the consistent stirring and layering of flavors.
I love pot.
No hidden ingredients.
Yeah.
Just honest-to-goodness flavor.
Well said. And that transparency can even give you a competitive edge.
Really?
Investors and lenders are more likely to trust a business that's upfront about its Forex dealings, especially when the rand is being a bit volatile.
So knowing IAS 21 is like having a secret ingredient that makes your business more attractive.
You could say that.
I like that.
But remember, this isn't a once-off thing. Exchange rates are constantly changing, and IAS 21 itself gets updated regularly.
Oh, yeah.
So it's about continuous learning and adapting.
It's like learning to speak another language. You got to keep practicing and keep up with the new slang.
Exactly. But don't worry, there are plenty of resources available to help you stay on top of things.
Oh, good.
You can dive deeper into the IAS 21 document itself, attend workshops, or consult with a financial advisor.
So it's like having a whole support system for your Forex journey. Coaches, mentors, and even translators to help you decipher the financial lingo.
That's the spirit. And remember, knowledge is power, especially when it comes to money matters.
I'm feeling empowered already.
Good.
This deep dive into IAS 21 has been an eye-opener.
Glad to hear it.
It's not just about accounting rules. It's about equipping ourselves with the knowledge and tools to ride those rand roller coasters with confidence.
And that's what we're all about here on the Indubo Knowledge Cast, helping South African businesses thrive even when the going gets tough.
Sharp, sharp. And to our amazing listeners, thank you for joining us on this epic adventure.
Yes, thank you everyone for listening.
We hope you're walking away with a newfound understanding of IAS 21
Yes.
and how it can empower you to make smarter financial decisions. Don't forget to subscribe to the Indubo Knowledge Cast for more lekker discussions.
Please do.
And be sure to share this episode with your friends, colleagues, and even that uncle who's always giving you unsolicited financial advice. Until next time, my people, stay curious, stay informed, and keep those rands rolling.